All right, what's up, everybody? Welcome to the High Performance Trader Weekly Recap on the Discord, right? So this week ending in April 23rd, 2023, right? The purpose of this video is we're going to be breaking down the week. We're going to be breaking down stuff we usually do, like adapting to market conditions. We're going to be breaking down some really good strategies that we take day in and day out that lead us to consistency. And one of my goals today, this week, is to really break down the gap fill strategy, how that plays into the whole understanding the market auction and understanding the context between supply and demand, and just breaking down how end of day plays such an important role in targets, right? We talk about entries, we talk about exits, we talk about stop losses. And one of the most important ways to identify bullish or bearish conditions is price action around end of day. So we're going to be breaking down this week and just going over what really works for us and what doesn't, breaking down journaling, and most importantly, breaking down the importance of journaling and why it's so beneficial. Because if and until you start to journal your trades, you're never going to be able to see what you're struggling with, right? You're not going to be able to identify the problem. So we're going to break down journaling and why that's so important, right? So we got Darren over here. Darren, how you doing?
Doing really well, Josh. Really excited to be recapping this week. I put on a lot of good trades, and just like as I go forward and journal my trades and identify my strengths and weaknesses, I just see the market as a constant flow of opportunities, and that's really what I felt like this week. And I'm excited to get into it. There's a lot of good stuff to go over.
Absolutely. I love how you said that, right? Being able to, the market perceived a lot of good opportunities, right? So I know me and you talk about this all the time, but we'll just break it down into a little more simplified context, right? So the market consistently is moving, right? Now, what causes price action, right? It's a battle between buyers and sellers, right? So based off price action, which is nothing other than buyers in control or sellers in control or more balanced market, right? So when we see this in a graphical presentation, right, when we see price action, what's that actually telling us, right? And that's giving us a market imbalance between price. And that market imbalance is what offers us opportunity to buy low and sell high, or sell high and buy low. So when you sit here and say you had a very good week and you were able to identify opportunities on the market, that is literally saying that you were in the zone, you were reading price action, and you were capitalizing on it, right? So that's really cool stuff, man. One thing I struggled with as a trader was the ability to trade, or the ability to identify like buyers in supply, right? So before we get started, I just want to break down this example right here that we were faced with on the Discord. So we got this supply zone over here, which is nothing but an area of value, right? And that whole concept is, yes, this is a supply zone. Yes, there was a large seller back here, right? That was unleashing shares, right? So many that it caused the price to go from 318 all the way down to 315, right? So a $3 move, very large seller during pre-market. And then price rallies right into this area of value. And I'll never forget. So this is usually an A plus setup for me to go short, right, Darren? Like you get your left shoulder, your head,
Yep.
and your right shoulder. But I didn't take the market short this week or on this day. And it was literally because I was able to identify very bullish conditions, right? And one of the main reasons is the whole gap fill strategy. So the day prior, we ended the day over here at 318.83. So what's going through my mind here is there's large buying going on. Buyers are closing this gap. And we haven't closed it yet, right? Because we got end of day right here at 318.77, and we're still well below it. So I don't feel comfortable going short until this gap is closed, right? Because we've seen so many gap fills this week in this month that I just really didn't feel comfortable going short, and it paid off because what I was able to identify was very large buying around VWAP, right? And I think I went long right here on this candle, right? Because we got this higher low off of VWAP, and I had this wedge drawn out. So it's really cool to go, hey, I'm a supply and demand trader. I trade based off price and volume analysis. But as we're entering supply, I'm not going short because my ability to adapt to market conditions in a bullish way. And then so I took this long targeting end of day. We ripped right into it. And then look at the sell off that did come once the gap was filled. Right? So it was really cool to be able to do that.
Yeah, I think so I did the same thing this day. I did not feel comfortable playing short until either this break and retest, which was on SPY, and then this zone at the top.
Yeah.
So I went long right from the open, and then in my mind I was thinking that I didn't want to get out until price hit my target, but I got out and then I re-entered,
Nice.
which I don't rarely do, but I actually got burnt on a Tesla trade recently, and so basically what that taught me is if the market moves in your direction in a really quick fashion, take your profit. You can always re-enter.
Yeah.
And you can't let yourself be capped by your buying power restrictions, because that is a temporary handicap at this point. In the next 5 years, I'm not going to be worried about my buying power not replenishing. So I can't let that be a problem now.
It can't be a factor. Yeah, I 100% agree.
Exactly. And so I re-entered, and I re-entered at this second test of VWAP on the S&P, and then I took it up until my target. It was an amazing trade.
Yeah, and know what's so cool? Like, I can only speak for myself. Oh yeah, this was this day when we were gap down. I literally just went through this in a YouTube video. Gap down right into demand. Right, look at that. It's phenomenal. Right into demand. You get heavy buying, right, and then rips up, makes a lower low. I took the market long. I actually waited pretty long here, and one of the reasons why I did is one thing I've been working on is being extremely patient, right? So, and this is something I've identified through journaling, right? So one thing that we're going to touch on in this webinar is the importance of journaling. So one thing I've noticed in my journal, and everyone, just because this works for me doesn't mean it's going to work for you. But one thing I've realized is one area that I struggle with is patience, right? So my goal this week was to be patient and especially wait on the 5-minute chart for candlesticks to tell me their story, right? So I literally waited till right here on VWAP, and you could see this volume candle right here that's completely green right off VWAP, right? This is where I went long, and I was targeting this pre-market area right here. And basically one thing, I was so proud of this trade because we were entering a supply zone, and I didn't go short because of the bullish conditions, right? So usually I go, hey, there's going to be a reversal right here, and look, there was. And just because there was a sell-off, basically what I'm getting at is you don't have to take your typical trades, right? I'm really not the continuation type of trader. I like to trade reversals. So now I'm stepping out of that, and I'm seeing a lot of success through continuation patterns, right? So it's really cool to.
And you did that by identifying market conditions through candlesticks.
Right.
It wasn't like you placed that trade even though it wasn't in one of your pre-drawn zones. Yes, it was near VWAP, which is an area of value, but it wasn't necessarily a zone.
Right.
And so that's where you were stepping out of your comfort zone, is what you're saying.
And I really like that you said that, right? Because I'm guilty of this, but I will say only trade your zones, right? And I'm going to stop saying that, and this is why, right? Because yes, trading our zones is very important, but you have to understand, if you're only trading your zones, that pretty much kind of makes you think only reversals, even though that's not the goal here. The goal is to trade an area of value and under the proper market conditions, right? Just like you said.
Yes.
So we got VWAP, which is an area of value. This actually acted as a break and retest right here. So price rallied, comes down, retest, get this strong base in off VWAP with the volume, right? And it rips all the way up into supply, right? So really, really good way to identify a highly probable trade, A plus setup. And it's really important.
That's crazy. I never saw the break and retest.
Yeah.
I never saw that. I mean, I re-entered when we came to the VWAP, but that's just extra confirmation to get in that trade long.
So usually what'll go through my head, right? So say I'm going long right here. I'll be like, okay, where are sellers going to show up? So obviously this isn't like the strongest supply zone, but this is an area where sellers might show up. So once we break past this and hold above it, I'll usually just right click, add a price level right here, and just see what price does around it. And you can see we got a perfect double bottom right around it. And remember, chart patterns are nothing but human behavior of large money, right? So we literally get a chart pattern in an area of value, and then it rallies all the way to pre-market high, and then you get a nasty sell-off, right? But yeah, that just adapting to those market conditions, being able to identify who's really in control, and trading with trend, right? That's really been super beneficial for me.
Yeah, Josh, zoom in on those 5-minute candles right around VWAP, because I think there's a lot that you can read you can read about those candles.
Yeah.
So we did this initial run up, and we kind of got to our break and retest from pre-market, which was like 412.
Yeah.
And then we saw sellers, but then we saw that massive bottom wick to VWAP, which basically proved to me that there were buyers there.
Yes.
But I just needed to be patient for price. That was the essence of waiting for multiple confirmations to go long.
Yeah.
You know? If you just saw that one candle, you probably would have hopped in and then gotten stopped out, and then the market reversed and went up like that. So you cannot just see one 5-minute candle and say, boom, I'm in this, you know?
And doing exactly what you just said, that's what I've been doing this week. And dude, it's paid off so much. Because what I've done here, so the way I used to trade is I would identify large money on a 1 minute time frame, which I don't recommend to anybody, right? The ability to use a 5 minute gives you, you may miss a small move, right? So what? What you're gonna do here is patient. You're gonna be patient, because I'm not gonna go long right here, because it's just I don't like it. We made kind of a lower low here. It's we're defending VWAP, but I'm not seeing the volume I want to see. I'm not gonna chase it right here, right? Because that'll skew my risk to reward. Once I get this wick at VWAP, right, with a completely green bar, that's telling me, just like you said, buyers have shown backup, and it's a way tighter move, right up to supply, and waiting for the candle to close on the 5 minute, I think, is one of the most valuable tools that you can use as a day trader, for sure.
Yeah, isn't it fun to kind of like you can zoom into the 1 minute and see what happened inside that 5 minute.
Yeah.
But for some reason, I just find it really fun to watch the 5 minute candle and the way it plays out.
Yeah.
And then read that as it's just a way more concise way to tell what's happening within that 5 minute.
Yeah.
And in a way, you watch the price go up and down, and it's going red, green, red, green.
It's red right here.
Somehow that tells me more about what's happening within that time frame than it is looking at the 1 minute chart.
Absolutely.
It's just clean, less noise, and there's less emotions and more logic in my decision making when I look at that. That's what it is.
And one thing that we talk about is getting rid of randomness, right? So when you're on the 1 minute time frame and you're literally looking for, you need to see a massive move, and usually they get eaten, because we all know on the 5 minute candle, the last minute tells you everything, right? And it's it's just so beneficial to use the 5 minute. It works so much better, and it like you said, it just clears it up. It makes it so much clearer. It just gives you so much more confirmation in catching the correct move. And as an options trader, we are constantly fighting time decay. So it makes so much sense, right? Because you could go long right here, right? You get this huge wick, but that's your
Sure.
first somewhat bullish candle. So why risk it? Because if you go long here, you're buying your options for around $100 versus going long here, you're getting them for like 60. You know what I mean? And you literally got in at the same price. So now you're using time decay for your benefit versus fighting time decay. You know what I mean? So it's really,
Yep.
it's just so much more
You know,
beneficial.
you know what I'm seeing too. So if you go from pre-market low to that high, it was a perfect 50% retracement on Fibonacci.
Yeah.
I don't often do the fib retracements,
Yeah.
but I was just looking at it.
Wow.
It literally whipped
Look at
it
that.
wicks off.
Wow. The Fibonacci's are extremely strong. I that's
I need to get better. I need to get better at the fibs.
yeah, well,
Um,
yeah, and put it this way too. You use the fib on a 1 minute, you're gonna have lines everywhere. You use the Fibonacci
yeah,
on the 5 minute, now,
Jimmy.
now you got a powerful tool. You know what I mean? And
Yeah.
super good stuff, man. So let's
I just realized we've been on the same trade. We've been on the same day for
yeah.
the entire recap so
Yeah,
far.
but look how much value we pulled from that. You know what I mean? Like
Tons to learn.
it's just so much right here, and this is literally so. One thing I want to kind of touch on. So obviously, you need a pre-market plan every single day. It just makes sense to program your mind in a bullish and bearish scenario. But one thing I want to touch on here is your pre-market plan. There's nobody out there that's going to predict the price action to the T, right? And I want to stress that that's not the goal of a pre-market plan, right? The goal is to get a general idea of your areas that you're expecting price to move in. The rest is on you. The rest is looking at this right here, right? So when we go through pre-market plan, right, we pretty much go, okay, I'm looking for buyers to show up here and I'm looking for sellers to show up here, right? This right here is the meat and potatoes of becoming a day trader. You need to be able to identify what the candles are telling you. And now the longer you wait every day, the more information you're going to have, right? I'm not saying wait all day and make the last move. But what I'm saying here is do not make a trade unless you have identified a strict trade plan that you're comfortable with, right? Like one thing I just want to kind of touch on is yeah, we came up with heavy buying right here in demand. This was a perfect area to go long. But just because you missed it doesn't mean you got to chase it. Like one thing I've been really working on is watching the candles, letting them tell me the story, getting these double bottoms, right, in these areas of value, and then trusting my intuition to go, hey, even though we have a supply zone here at 412.88, if I get strong buyers right here, I'm expecting a move all the way to pre-market high. And it's just that candlestick analysis is so important.
Yep.
So important, man. So one thing I want to do, we're gonna get rid of this pre-market data over here, and we're gonna take a look at all these gap fills. So one thing we've been going through a lot lately is we sell off during pre-market due to fundamentals, due to whatever's going on in the world, and then we get sort of stuff like this, right? So we're gonna kick it right off. This was 417. I think that was Monday. Yes. So Monday we got this this large Monday night we got this very large gap up, and then this was the next day. So one thing I want to talk about here, obviously, is end of day and the importance it plays. So end of day here is at 413.94. Now I used to, and as I grow as a trader, I'm realizing just because we come down into end of day and get buyers doesn't necessarily mean go long, right? So end of day, just like any other area of value, is just an area that is super volatile. So we get all this buying and selling pressure at the end of the day every single day. So when we gap up, right, that basically means there was a bunch of buy orders after hours in pre-market. So as the market opens, all those buy orders kind of got to get met with opposing sell orders. That's why we see these liquidity retracements to fill the gap, right? So one of our strategies, and I'm not just saying go short off the rip, because that's not the case. In very bullish conditions, we'll get gap ups, and then it'll rally. But if you notice, the market usually always closes a gap. It might not be today, it might not be tomorrow, but down the line, it usually will close its gap, right? So one thing that you got to do is wait for your specific chart pattern, right? So you get this sell off, and then price comes right back up to 415.72. Sellers come in, bring price right down to end of day, right? And now this was a very aggressive sell off, right? I ended up going long here and getting stopped out of my trade. And that's completely fine, right? And that kind of goes back to waiting on the 5 minute for the retest and to see what you see. I kind of rushed the gun here, went long, and then price came down literally and played around here, and then you know that was it. But the importance here is just
We didn't really get anything concrete for the rest of the day. I mean, it was just back and forth nonsense.
Yeah, that initial short, this rip through end of day would have been a really good trade. But even then, look at the demand zone it hit. Like usually, you break through end of day, you can kind of expect to move all the way down to demand. That didn't happen. Yeah, this was I forgot what the news catalyst was. But yeah, this day was rather nonsense. But then the next day, right?
Yeah, I got, so that day I was looking for, I made the trade on SPY. I was looking for a head and shoulders up into that supply zone.
Yeah.
And I don't know what it was. Yeah, right there. And I went short. And I caught that initial move down to end of day.
Yes.
And I took profit at end of day. And then I did exactly what you did. I went long at end of day. And then I stopped out. But the importance of that trade was I made like almost 100% on that short, and then I lost like less than 30%. But I would, like, let's say I really thought the market was going to go long, I would have erased all the profits that I made.
Yeah.
But I put on one winning trade at the beginning of the day, and then I had two small losers, and I still ended up green on the day. But it was because I was able to stop out quickly and not erase my profits.
Yeah. And dude, that is the definition of consistency, right? The definition of consistency is your winners being larger than your losers, right? So a lot of times, right? What I used to do is at 30%, I would take the profits. At 40%, I would take the profits. Now I only take profits at my targets, right? And the importance of that is that extra dollar move is going to give you that 100%, which is going to make up for your losers. And I mean, look at this. Look at all these wicks right here. Oh yeah, Darren, I remember we were waiting for a break below, and then we got a break below, right? And then it was a false breakout. Yeah, this day was really something else here, because for I think it was like 2 hours we moved sideways. Then we got a break above VWAP, and then never got that initial move back up to 415. And that's all right. That's just what the market does sometimes, and that's the importance of using these candles, right? So then the next day here, let me just move end of day back to where we at. Okay, so we ended up ending the day at 414.22. Now we get another large move to the downside, right? And we get this open over here. Let me just make sure. Okay, so we weren't in a very strict demand zone, but we were in like some area over here that I'm not even gonna identify because it's not that concrete. So this trade right here is a very important. What I like about this trade or this day is it shows you how to make trades based strictly off candlesticks. So this opening was kind of confusing. I mean, look at all these indecisive candles right here. That looks very weak. And then you finally get this super large move, and then you get a nice little Bayesian candle off of VWAP, right? So considering we're opening much lower than end of day, right? This large gap here, once again, that is now I'm looking for candles that are going to tell me that price is going to close this. So we held above VWAP. We got a nice little, once again, the 5-minute candle really helps you understand the overall context of the market. You get this long candle off of VWAP, perfect area to go long. And I actually think I took the market long here. because so this goes into what we were talking about earlier. So you got this supply, and I'm sure if I pull up pre-market data real quick, that there was a bunch of supply zones in pre-market. Let me see right here. Yeah, so this is kind of what it looked like. Oh, hold on. So this is what it looked like with pre-market data. So I did not like going long here in the beginning of the day because, and I'm going to tell you, we weren't at pre-market low. So I've been burnt a lot of the time here going long right here, and then price sells off below pre-market low and then really tanks, right? So I had my zone right here and so on and so forth. So I did not take this trade in the beginning of the day. I waited for price to rally and then come down, and then we got this really large candle, kind of looking like a bull flag. So this right here was really appealing to me because even though we were in a supply zone, that buyers were creating demand there, right? And I believe if I pull up QQQ, you'll see a very similar chart. And so this is when I ended up taking the market long. It wasn't a complete breakout, but I felt comfortable here because the candlestick, right? It was, and we kind of had this break and retest thing going on. So we've been seeing a lot of this lately, Darren. And it's crazy because this is not my average trade, but the returns I'm getting on these trades are great. And I'm being patient, right? I'm letting the market tell me her story. I'm literally sticking to all my rules. Just we're not in specific zones targeting reversals.
Yep. The reason I had much the same analysis that you did on this day, and the reason I didn't take it long for the same reason was my risk to reward just didn't make sense. You know, I was thinking, okay, like we have been selling off, so it's reasonable to think that sellers could come in and test pre-market low.
Yeah.
So I had that in the back of my mind, and I was just like, you know what, my risk to reward, it's not making sense to go long here. I just need to wait for a better entry.
Yes.
And I didn't take the trade, and it's fine. You know, the market can move. The market can move, and I don't need to always be trading the market when it's moving. You know, I need to wait for my high quality setups.
Yeah, exactly. And so one thing I've been doing, because you're 100% right? So considering you're going to go long here, right? Where my stop loss is below the break and retest. So that's what I've been doing on these trades, right? Because it's like, oh, if I go long here, where's my stop? And without identifying these break and retests, I'm not going to have a valid stop loss, right? I'm going to go, oh, what, below VWAP? And that's scary. I don't want to put my stop below VWAP because I got to wait for the candle to close. And, it's just... So one thing I've been doing here is just lining up these break and retests. And if we pull out the 1 minute, you'll see on the... Hold on, let me just... So one thing I will use the 1 minute for lately is when identifying a break and retest, because the 1 minute will tell you here, right? Let me find it right here. Okay, so this is what the day looked like on the 1 minute, right? So this kind of plays a little more. This kind of helps you see a little more, and that's the beauty of it, because you use the 5 minute for these reasons, and then you can use the 1 minute for these reasons, right? But all I'm saying is I don't like using the 1 minute for entries. But one thing I will do here is go, hey, there was a seller right here, right? So once we rip past it and buyers show up with strength, right? I didn't really feel comfortable going long here, but once we broke past this resistance, I was like, okay, if we can come back into 412.08, I'll take the market long. And then you get this massive rejection right here. I think I ended up going long right around here. And once again, my stop loss is going to be right below the break and retest. And then, I did not feel comfortable in this trade. But once again, like I said, I'm trying to really step out of my comfortableness and branch out, because just, it's not about feeling comfortable. It's about going, hey, this is what I've studied from my journal, right? We get these continuation patterns in supply. That doesn't mean that, you're in supply, you have to go short. So once again, just ended up working out pretty well. Targeted end of day here. and took my profits, and then look, end of day played a perfect another break and retest, and literally price broke past it, and then it didn't. So
something that I used this week, which I haven't used a lot in the past, is looking at VIX.
oh yeah,
And what's cool about VIX is the fear index. So it's been very bearish
I'm
in
gonna pull it up.
pre-market. So you think yeah. So you think that sellers are present, but the thing
Right.
is, when the market opens up and VIX is selling off, that means that people are not scared. If you see VIX skyrocketing in a demand zone, that means that there's fear when we're in a demand zone,
Really?
and that would be an opportunity. Yeah, that would be like saying, okay,
We're gonna bust
buyers are
through.
not finding value at this area.
Right.
Yeah, so if you zoom into the 5 minute on VIX for the last, I think you might have pre-market off.
Oh yeah, let me pull it up. Okay, here we go.
So when you see VIX selling off in a demand zone, that means that there's no fear.
Right.
That means that there's no fear in a demand zone, which means there's more confidence in a demand zone.
Oh.
So yes, we have been selling off in pre-market, but if VIX is tanking and you're in a demand zone,
that
means
go
that
long.
that means that there's confidence in the beginning of the day. So
Yeah, let's
it's
check
just
that
extra
out.
confirmation.
Oh yeah, look at that. So you nailed it right on the head. So right here, hold on. So right here,
Well, that day is kind of choppy, but yeah.
but still, look at the VIX right here selling off heavy, right? And we are in demand, right? So yeah, that's literally that's really good tool right there is the VIX. I forget about the VIX. The VIX is very powerful.
So look at 419, for example. We were just talking about how we were not confident in playing longs this day because whatever reason.
Yeah.
Maybe our risk to reward is off. At least that was my excuse.
Right.
But if you look at the VIX on 419,
Wow.
it was selling off. It was selling off right when we were not comfortable taking it long. So that could have been an indication that buyers were confident in this zone, and that would have been confirmation to take the market long.
Yeah, so check that out.
So we weren't everything we wanted to see to go long.
Yeah, so that's really cool. So look at this. You get these indecisive candles right here, and look at the VIX. The VIX is looking somewhat bullish, right? That's really cool.
No, it's like, so when the VIX is looking weak, that means that fear is going down.
Right.
In other words, confidence is going up, and that's what you want to see when you're in an area of demand.
Yes, absolutely. Awesome, man. That's a really good tool. I'm gonna use that more because that's definitely another tool to identify market conditions. Right. That's super
and
powerful.
VIX is the fear index for the S&P 500. So it's one of the tools that we need to be looking at.
Yes.
And when you're not really seeing everything you want to see based on the S&P price action, maybe look to the VIX and see, is that telling you any insights? Look at that.
Yeah, that's perfect.
It's just sold off at the beginning of each of these days, and that's when we were in demand.
Yeah.
A really good sign.
Which is all buying opportunity.
Yep.
No, yeah, that is lovely. Like there. Hold on, my TOS is having serious technical difficulties right now. Hold on. All right, there we go. Yeah, look at that. Bam. It's literally the opposite. Yeah, no, that's
it is.
That's really cool stuff. And then so another thing you can use right there is the VIX, right? And especially with identifying these gap fills. Now, it's really important, and I just want to stress this for anybody that is going to get rid of pre-market data to identify gap fills. One thing that can hurt you with getting rid of pre-market data is your ability to your targets, right? So during pre-market, you're going to consistently see, let me just pull up SPY over here. So pre-market will give me places to target or areas where sellers may or may not pop up, right? So just for instance, over here on this day, which was 4/20/2023. Over here, you can see without pre-market data. Hold on one second. So without pre-market data, all what you see here is a gap, right? So in reality, you're gonna go, hey, I want to go long and target end of day, and you can see though. Hold on, we didn't hit end of day. We literally hit this pre-market high area. So one thing you're going to lose with getting rid of pre-market data is specific areas of value. So just be very observant of that, right? Because I've gotten hurt multiple times by getting rid of pre-market data, going long, and expecting a move all the way up to end of day. And in reality, you got this large seller right here at 413.82. So one thing I'm trying to touch on here is that use these tools, but don't depend on these tools. You know what I mean? Like just because, it's, the VIX might be doing something, don't base your whole trade off one tool. One thing we do to identify market conditions is look at everything, right? It's not as simple as going, hey, on a larger time frame, you're in an uptrend, go long, right? It's not that simple. There's so many different factors that go into being able to identify the conditions properly and to be able to adapt to them. So just what I do and what works for me is I use all these tools and then I'll just kind of simplify the process, right? So we've been getting these large gap down. Now I don't just go long off the rip. I now wait for price like this day right here. I think we already talked about it. But what really worked for me here was getting past this little level during pre-market and then using it as a break and retest, right? So, and once again, just like Darren said, the candlestick analysis is super important to be able to see. And then we got this massive large sell-off here, right? We weren't able to hit end of day, but we still closed the gap, right? And that's really important to see, right? So we got, what is that, 413.66, and price literally rips right up to 413.66 and then sells off really heavy. So it's really cool to see that, right? Like the auction of itself, right? Like the demand of shares is really high until the gap gets closed. That's when the supply of shares gets extremely heavy. And look at this sell-off we got. Look at the volume. The volume got crazy.
Yeah, one thing I like. So I didn't catch that short. I just went long twice, and that was it for the day.
Yep.
But one of the things I always like to look when I back test or when I just look at go over the day is there anything that gave me clues that those sellers would step in? Like, could I have looked at price action and seen clues that sellers were there?
Right.
And I mean, we saw some considerable selling, especially on QQQ.
Yeah.
That was fairly violent selling around like 10.50.
Yeah.
And maybe could have told you that sellers were ready to step in. They just needed to hit an area of value or a zone.
Yeah.
And that happened perfectly on QQQ.
And have you
touched that zone exactly?
Have you noticed, and that's another thing, right? So, I know we've talked about this before, but it's so important to have your eyes on QQQ and the S&P, right? So I've been trading QQQ a lot lately. I feel like QQQ has been really respecting its zones a lot, like maybe more. Like, have you noticed that too, Darren? Like a lot more than the S&P. I mean, look at this.
Last week, I'm pretty sure I made all of my trades on QQQ just because they were respecting their zones, and I just chose to trade QQQ. You know,
I mean, look at
they're going to make relatively the same moves, but the importance of making a move when you're in your zone, it just pick the ETF that's just trading your strategy, and then play that.
Exactly, and literally, we got this wedge, took that long, bam, and always keep your eye on yesterday's highs and yesterday's lows, right? So that's really been helping me as well. So say I actually took this long, right? So we had this supply zone right here. We had end of day, right? Oh, wait, was that end of day? Yeah, wow. Okay, so end of day was way up there. Large gap down. I missed this initial rip in the morning because Apple on this day, right, was ripping right into a supply zone. Look at that. So, so check this out. Apple was ripping right into like end of day into supply. So when I'm trading QQQ, I always keep an eye on Apple, and I just really didn't feel comfortable going long on QQQ when Apple was ripping right into end of day. And you can see we got some sellers, but once again, that's fine, right? Buyers were persistent. So once we, were holding and we didn't get the violent sell off at end of day, I was like, okay, I'm expecting Apple to touch 160, 168 right here. Let's see what happens, right? So then I drew the wedge, got that large base in off of VWAP, and then I was like, you know what, I'm going long, let's do it. And then we had a really nice break and retest of this area of value right here. And every time I see something like this, that is just solidifying my trade plan, right? And because what's really going on right here is the people that went short right here, when price rips and comes down, this is where they stop out of their trade, right? That's why the break and retest is so vital, and that's why you're able to see it so clearly, right? So when big banks and institutions are going short right here, right? Short, buyers step up, then buyers blow past it, right? First, they'll stop out of their trade right here. That's why you get that large volume, and then it rips up, comes down, and then everyone gets out of their short plays right here, and then that's when the market imbalance turns straight to demand, and usually will rally into the next area of value right there. So, bam, literally,
Yep.
And then look at
so that had to have been an institution sitting there saying, we want to sell at 318. And then they saw that buyers were stronger, so they probably switched up their plan, and you were like, you know what? We're not going to try to fight buyers. We're going to play with buyers.
Yep.
And then they bought right there, switched up their plan
And then,
real time.
Yeah, this is one of the things we were talking about, Darren, right? When smart money will actually bid the price higher to sell, right? So
Exactly.
that's, you know what, that's really, look at the story this is telling, right? So you got large money going short, right? And then they were like, you know what, we're gonna bid it much higher, right? We got all these short plays. We're gonna let buyers take control of the market, and now we're gonna get a way better price right here on our shorts. And then look at that sell-off. It's insane. I can't imagine all the liquidity these guys got from bidding the market higher and then doing this massive.
That's what they were doing.
Yeah, look.
They were like, we're going to use these buyers to fuel our move. They lost money on these on this run up, but then they made money. They made all their money back on huge short play.
You know what's crazy, Darren? And Mark Douglas broke this down. They didn't even lose money here because they own the commodities they're short selling. So even when as prices going higher on the commodities they own, right? So they own 100,000 shares of QQQ, right? So as prices going higher, their portfolio is still going higher. You know what I mean? Because price is increasing. Then they short sell all of this back to TD Ameritrade, back to all so-and-so. You know what I mean? So they're literally making money going up. They're literally making money going down. It doesn't even matter. But this was a perfect example of it right here.
Yeah. There's so much to learn from these days.
Yeah,
you know? Like, even if you made a losing trade, you have to look at what was happening and try to see, like, what is the deeper story behind the price action.
Yes.
And when you're able to do that, like, not get focused on, like, let's say you put on a losing trade this day and think, I'm not going to look at that day. There's so much value in all of the price action this day that you can learn going forward for your trading.
Absolutely. And I feel like that's where so many traders fail. And I say this because I did it for so long, right? Like, I literally would take a losing trade on this day, or I would take a winning trade, doesn't matter. And I wouldn't go back and gather any intelligence on price action this day, right? So, I mean, we've identified tons of break and retests. We've identified tons of, just selling, buying, buyers defending VWAP, right? Like, we got all this information here. And another one, look at the break of structure right here. So you got this upward trend, price breaks. And then once price gets below this break and retest level, look at how the volume starts to pick up so strong. Like one thing that I do as a trader is I just constantly look at the volume and look at what the volume's telling me. Like if volume's picking up in an area, why? Right? And then I'll go back and look, oh, hey, it's because we broke this area of value. And then it's like, okay, so going forward, that's what I'm looking for. That's insane right there. Put option on that probably went up over like 2,000%. So
yeah, had been big returns.
Yeah, and then Friday, I wasn't able to trade, but one thing I noticed Friday, right? So the S&P 500 and QQQ. So first thing that happened on Friday here was the end of day rejection, right? Check that out. I mean, price rallied in the end of day multiple times. That's another reason why the 5 minutes so powerful. I mean, look at this candle right here, right? Huge rejection off end of day, and price literally rejected end of day multiple times. But on the S&P 500, you literally had price. Let me just add pre-market data real quick. You had price literally rip right into demand to the cent. Look at this.
Yep.
Right to the cent.
Yes, the day prior lows.
Yeah, yesterday's prior lows. That's another thing. I know you guys see it all the time in the Discord. I go, hey, I'm targeting yesterday's lows, or keep an eye on yesterday's lows. Perfect rejection off yesterday's lows. And this is why I love, because trading, yes, has tons of components and it can be very complicated. But if you just stick to a strategy like this that's super simple, you will have success. I mean, look at this. You have yesterday's lows, right? So how this strategy works is if price can come down to yesterday's lows and is met with buyers, you take the market long and you target end of day. That's literally $1.88 move, which is over 100% on SPY options. This right here is 100% trade. This is all you have to capture to double your money, right? Like, I know we talked about this before, but having your expectations and your reasonable targets is so important to becoming a consistently profitable trader, right? Like, these are literally all the trades I look for every single day. It's just these little moves off of demand right to end of day. I mean,
yeah, I want to go over an example of a trade that I made on Friday. So if you pull up SPY and QQQ next to each other, this is an example of seeing confluence across the charts.
Yeah.
So I was looking. So on SPY, we opened up above end of day.
Yeah.
And when you open above end of day, you look to play the market long when it retests end of day.
Yeah.
QQQ, on the other hand, opens up below end of day.
Yeah.
So we're seeing these two strategies not agreeing with each other.
Yeah.
So at this point, I'm saying, all right, there's two things that are disagreeing. I'm going to wait for the market to play out and tell me really what's going on.
Yeah.
So I waited. QQQ, yes, it did a perfect end of day rejection and sold off.
Yeah.
But now that we came back to this level, I'm like, okay, I am looking for any indication that these same sellers are going to step up.
Yeah.
So I didn't pick a play in the beginning because I didn't see confluence across the charts. I saw buying at end of day on SPY, and I saw selling at end of day on QQQ. So I'm sitting, I'm waiting, it's not agreeing.
Yep.
Then I see price come back into end of day on QQQ. And that's where I took market short on QQQ. Nice. And I got 100% move right down into the demand that we created
right
pre-market.
Look at that.
And 100% move just because I didn't rush.
Yes.
I didn't rush and chase that trade. I wanted to wait for price to re-enter that zone where sellers previously showed up.
Yeah.
And then I saw all those wicks to the upside on SPY and QQQ. And I'm thinking, all right, I'm going to see if these same sellers were there. And they were.
Look
Boom.
at that.
Took my profit.
No, that's exactly what I'm talking about. A 10-minute trade, 100%. Bam. Can't beat that. And and why? And you could say, oh, it was an end-of-day rejection. But in reality, you made 100% on your investment this day because you were patient, because you didn't rush, right? You didn't just jump into it. And this is what people need to write in their journals, right? I made 100% today because I was patient. I didn't see confluence in between SPY and QQQ. I did not feel comfortable going short right here, even though you could have. And let's say you did. Say you went short right here and made 100%. Shit, you may have made 150, but that would have altered your mentality for your next trade because you wouldn't be under the impression that waiting for the retest was important, right? So then
Yes.
your next
Yeah.
day you would have lost 100%, or we'll say 30, doesn't matter, because of your expectations. That's why it's so important to trade your trade plan even when it's wrong. Even when your trade plan fails, that is okay, because what you're doing is breaking into your brain the importance of it. And it's so awesome, man. Like, just seeing that, because that right there is high quality trading. Waiting for the retest. If you miss it, so what? It's better not to trade the
Yep.
whole day than to ruin your whole mentality. That is the importance.
Exactly.
That is literally what consistency is, right? Consistency isn't getting every trade correct. Even though, yes, that would be consistent, that's impossible. So what we could do is get rid of the randomness, right? Get rid of the just random gambling. And this is how you do it, right? You literally find an area of value, you wait for that retest, and you look to see if those sellers show back up. And that's literally what they did. And you caught $100 or $1.50 move, and you made 100%. That's perfect.
It's like anything in life. You need to have standards for what you consider to be a high quality setup, a high quality experience, whatever it is in life.
Yeah.
Like, you have to say, all right, these are my rules. This is what I consider. And you have to look at certain things that look very, very tempting and say, okay, something doesn't look right here. Not everything's agreeing. And you have to be completely okay with sitting there and watching the market move, maybe exactly where you thought it was going to go. But if it didn't fulfill your strategy and your trade plan, you don't take it. You have to be okay with sitting there, watching the market move and not trading it because it didn't fulfill your criteria for a high quality setup.
Yes, 100%, dude. That's it, and literally that's the goal. The goal is to, just like you said, develop a state of mind, develop a process. Right? We offer one on the Discord and in the course. Right? But develop a process that you want to repeat every single day. Right? Like, I'll just break down mine real quick. Identify your market conditions. Right? Number one. Number two is identify your areas of value. This is supply, demand, end of day, pre-market high, low, whatever, any area you're looking for volume, right? Number three is identify your chart pattern in your area of value. That's literally what Darren did here. Chart pattern, double top in an area of value, which is end of day, right? Number four is your target, right? And your stop loss. So where does price need to go for me to get out of this trade? Whether it's successful or unsuccessful, there's two areas where I'm getting out of this trade. One is my stop, which over here is at 316.70, and two is my target, which is pre-market low, right? And number five is log and recreate, right, your trade. Because and number five, the logging and recreating, like we've talked about in the last hour here, is the most important aspect of becoming consistently profitable, right? So as a trader, you need to develop confidence, you need to develop control within yourself, and you need to develop conviction that your trade process and your strategy is consistently profitable. And the only way to do that is by measuring your success, right? So how you do that is by measuring your skill set through logging your trades, right? This is what we talk about. This is what we preach. This is what has changed my life tremendously, right? So I absolutely love the process, and learn to become a structured individual, because this right here offers so much opportunity if you can remain structured and stick to your trade process.
Yep, and this is what I do. This is what we're doing right here, what we've been doing for the last hour. This is what I do at the end of every single day. I go back, I look at the trades I made, I think about the behaviors that I made. Some of them may be according to my trade plan. Sometimes maybe I bent my rules and I lost.
Yep.
But these are the things that you have to identify, and this is what I do every single day. What we're doing now is essentially journaling, talking through, looking at price action, and learning from it. And if you do this consistently, day in, day out, you'll will eliminate the behaviors that contribute to your failures, and you'll solidify what works in your mind and just keep repeating that over and over and over.
Yeah. Yeah, absolutely. That's perfectly said. You know what I mean? You're only going to get what you put into it. You know what I mean? I literally traded for 3 years straight and didn't log one trade, right? I would literally just, oh, go long, oh, lost, oh, made tons of money, oh, lost it all, right? And once I started logging my trades, I started realizing everything we talk about here. I started learning what an area of value was. I started learning the importance of volume and supply and demand. And then I started figuring out probabilities and developing an edge and understanding the psychology behind price movement. And it just evolved into this massive methodology of success. And it literally changed my life up and down. I mean, whether it was weight loss, whether it was self sabotaging behaviors, right? Trading has literally changed my whole life up and down. And it's because of all the work I've put into it. So I highly recommend that anybody that wants to, change their life and wants to become a consistent trader, start to log their trades and develop disciplined behaviors in your life, right? Like, don't just go home and eat the junk food. Like, I know that sounds dumb and small, but if you are the type of individual that can't withstand a donut, you do not have a chance in the market. You know what I mean? If you immediately feed into your flash or just some sort of feel good exercise, you're done. You do not have a chance in the market because you can't control yourself from these self sabotaging behaviors. And what's going to keep you from waiting for that retest if you can't? You know what I'm saying? It's so important.
Yeah, and you're not going to know what those behaviors are unless you go back to your past
Yes.
trades and you
Yes.
think critically about each trade.
Yeah.
Maybe you can't just look at it, oh, I lost. You have to understand what are the beliefs that caused you to put on that losing trade.
Yep.
And you can't know how to improve unless you identify what they are specifically. And if you see a pattern repeating week in, week out, think about what are the things that you can do to eliminate that behavior, and then set up a process to overcome that.
Yes. Absolutely. And yeah.
Yep, Mark Douglas says, if you do not know what you did to win the last time, you obviously don't know what to do to keep from losing this time.
Yes.
You can't just randomly throw money at the market, keep throwing money at the market, make some winners, make some losers, and expect to be consistent.
No.
Because you have to figure out what contributed to your success, what contributed to your failures, and make specific calculated moves from there.
Yeah. Yeah, I love it. Yeah, exactly. And listen, that pretty much wraps it up. I mean, you're gonna get what you put into it. How bad do you want it, right? What are you willing to do? Listen, Darren, thank you so much, man, for showing up. This has been a really good recap. I hope everybody gets tons of benefits from it, right? We're dropping tons of material, right? I'm dropping mini courses weekly. Darren's working on a phenomenal course himself, right? So we
Yep.
got a lot to look forward to this year. So get involved with a high performance trader, right? Like, subscribe for more content. We'll see you in the next lesson. Darren, have a good one.
Yeah, you have.
All right. Thanks, guys.
Yep, have a good one, buddy.
Easy.